Ladies and gentlemen, good day and welcome to the IPCA Laboratories Limited Q2FY25 conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors Limited. Thank you and over to you, sir.
Thank you, Adanya. Hi, good afternoon, everyone, and a very warm welcome to IPCA Labs Q2F25 post-earnings conference call hosted by DAM Capital Advisors Limited. On the call today, we have representing IPCA management, Mr. A.K. Jain, Joint Managing Director, and Mr. Harish Kamant, Company Secretary and Company Counsel. I will hand over the call to Mr. Jain to make the opening comments and then we'll open the floor for questions. Please go ahead, sir.
Thanks, Nitin and DAM Capital for organizing this call. Today's call and discussions and answer given may include some forward-looking statement based on our current business expectations. It must be viewed in conjunction with the risk that pharmaceutical industry business faces. Our actual future financial projections may differ from what is projected and perceived. You may take your own judgment on information given during the call. Business performance. Domestic formulation business delivered a growth of 11% for the quarter. Mid September 2024, IPCA is ranked as the 16th player as per IQVIA and is the fastest growing company among the top 20 players. IPCA has outplaced the industry in Q2 FY25 and met September 24. Overall IPM growth is around 8% and IPCA has delivered almost around as per IQVIA around 13% growth. And met September 25, IPM growth is around 8% and IPCA has delivered around 14% growth. Both on acute and chronic segment, IPCA has delivered better growth compared to the market. Acute segment in this quarter has grown by almost around 7% and IPCA growth is around 12%. And on chronic segment, your market growth is around 10% and we have delivered around 17% growth as per IQVIA. IPCA continued to improve its market share. In Q2 FY25, our market share has increased to 2.14% as against 2.04% in Q2 FY24. And March September 2024, our market share is around 2.03% as against 1.92% in March September 2023. So overall, there is almost around 11 basis point improvement in the overall in market share, and in second quarter the improvement is almost around 10 basis points. We have now 6 brands among the top 300 brands in the IPM. CTD-T has now entered in top 300 brands list with 193 rank in March September 2024 with 88 rank gain. On export formulation business, we have delivered around 15% growth for the quarter. The branded promotional business has declined by around 2% in this quarter. Generic business has grown by around 8%. And institutional business in this quarter has grown by almost around 85%. So overall business growth has been around, generic business growth is around 15% overall for the quarter. Overall, API business has declined by around 5%. Domestic business has recovered and delivered a growth of around 14% for the quarter. But API export business has continued to show some kind of decline. And overall API business for the quarter is around 319 crore as against 335 crore same period last year. On margin front, our standalone margin for the Q2 EBITDA margin is 22.89% against 20.86% in same period last year, an improvement of almost around 2.03%. Our consolidated EBITDA margin for Q2 FY25 is at 19.10%, as against 17.64% for Q2 FY24, an improvement of around 1.46%. The improvement in the margins is largely due to improvement in product mix, lower input cost, and lower manufacturing and other overhead. Both the standalone and consolidated EBITDA margins are better than the guidelines given for the FY25. Having given the broad numbers, now I request participants to ask questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
The opportunity. The first question, if I in terms of
Mr. Kunal, your line is breaking. I would request you to please repeat your question.
Is it better now?
Yes, Mr. Kunal, please proceed.
Sure. So, sir, the first question on the FY25 outlook that we had provided earlier on the top line, consolidated top line and EBITDA margin, if you can update us after H1 performance, what are your revised expectations for the full year 25?
On consumption. Some of the banks in the recent conference have also highlighted.
Mr. Kunal, your voice is fluctuating. I would request you to repeat your question.
Hello, is this better now?
Kunal, background also some voices are coming.
Sorry, sir. Is it better now?
Yes, better now.
Sure. Sir, I just wanted to ask, we had provided some guidance on top line and EBITDA margin on a consolidated basis. With the H1 performance behind us, what would be your updated expectation for FY25?
If you look at on margin front, our guidelines for standalone margin was around 21%, as against that, I think, yes, incrementally first half we have delivered around 22.89, and therefore overall for the full year, overall your standalone EBITDA margins are likely to be around 22% as against the 21% guidelines. And the similar line, the overall consolidated margins will also be better. Overall growth projections given for the whole year was around 10 to 11%. As against this, for the whole of the financial year, we will have a growth of almost around 9 to 10% now.
Okay. So probably at the absolute EBITDA level, more or less the same, because lower top line and higher margin.
Little lower top line.
Yeah. So for the Unichem business, in terms of synergies, where are we in terms of achieving those synergies? What have you already realized in this results in the last couple of quarters, and where do we see that going in the next 3-4 quarters?
Then Unichem, we have taken over. We have spoken about many synergies part. As far as your Unichem sourcing product from us, from IPCA, work is still going on. Their sourcing has not started, which will also have some kind of cost reduction for them for view of our API, which they are currently buying from outside. And I think it may take around 5-6 months more. So in current year, practically nothing of that nature would happen. We also talked about Unichem's improvement in the API processes, where I think almost around 6 products we have reduced overall their manufacturing cost and validations are over. Now the process of, and in all these 6 products, their improvements are almost around somewhere between the 25 to 30% reduction in RMC cost. Now the whole process of filing and then taking approval and that will start. So 6 product improvement is already done and balance is in pipeline already. As far as the procurements are concerned, a lot of benefit has already come. Buyings are now taken up by the common group, and whatever IPCA benefits are there in terms of lower your pricing, that all got extended to the Unichem also. So those advantages come. As far as market extensions are come, the lot of work are in pipeline, and we said that it's going to take a little longer time because it's first the validation, then stability studies, and then filing in the market and all that. So it may take 1 more year for that kind of things to start. Only the products where the no further bioequivalences are to be done, and wherever straight away your US dossiers can be filed in Europe and various other markets. So that process is going on right now. Few products are already filed, which approvals are yet pending. Larger product range to extend to the other market is going to take another almost around 1 more year because it's all regulatory process and a lot of data need to be generated. But our initial calculations where we were talking that on second year onwards we should be able to get almost around 200 crore kind of EBITDA margin. I think that will surpass in the current year itself. In first half of the current year, the EBITDA margin of Unichem is almost around 113.75 crores. So the year itself we will and all these improvements will keep on coming in as the filing done, as the approvals are received and all that. So that process is going on. Yeah.
Sure. And sir, last one, if I may, how is our own US business is shaping up now? Since we have the plant clearances, have we launched any products, and how is the uptake in those products?
I think overall we have sent almost around up to September around 30 crore worth of goods to US, but most of the goods has reached to them at the end of the period. I think they have hardly out of that almost around 1.5 crore sales has happened. Balance were all in stock, and now sales will start reflecting and from the third quarter onward. So practically it's got eliminated in consolidation practically everything. So nothing major has happened. We already sent 3 products and another 3 are in pipeline. So I think current year we will launch almost around 6 products.
And these US sales will be recognizing in our P&L directly, or will it be recognized through Bayshore?
No, we have said that Bayshore entity, whatever business is there, that got transferred to the Unichem because in order to have entire synergy, that US business will be done entirely under one umbrella. So since Unichem is having bigger business, all these the Bayshore business is already transferred to Unichem, and IPCA business will also be done through Unichem. So there are no duplication of the all marketing and administrative and all those kind of setup. So it will be all done through Unichem. Yeah.
Okay. Thank you, sir, and all the best.
Yeah.
Thank you very much. The next question is from the line of Dharmil from Dalmus Capital Management LLP. Please go ahead.
Hi, thank you for taking my question and congratulations on this set of numbers.
Mr. Dharmil, may I request you to please speak up? Your voice is coming out as muffled.
Is this clear now?
Yes, please proceed with your question.
Yeah, thank you for taking my questions. My questions are again on Unichem. Earlier in the previous call, you had given a guidance of around 2,000 crore revenue, while in H1 we have all done somewhere around 900 crores. So is the guidance still on the plan, or where are we up to on the guidance? Is this still achievable for FY25?
I think overall business of Unichem may remain around the 1850 to 900, 1,900 crore in the current financial year. Yeah.
Got it. And EBITDA margins?
EBITDA margins, let's say first quarter was almost around 12.52%. Second quarter it has improved to 14.35%. And overall, I think it will remain 14 to 15% for the remaining period.
Got it. And the 11% revenue growth in the current quarter for Unichem, can you break it down into how much was it volume driven and how much was price driven? And in general, what is the pricing scenario for?
Pricing wise, if you see that there is a margin decline is there, so pricing is hardly the 1.5% kind of price declines are there. So overall, like say, US business has grown by almost around 12%, 12.5%. There is some decline in Brazil, and overall contract manufacturing business has done well. So overall, for the second quarter, if you look at overall on consolidated sales is almost around 9.4% improvement is there in current. And taking into the other operating income and others, including it's around 11% kind of overall growth is there for the quarter.
Understood. And what would be the current capacity utilizations in Unichem, and how do you expect it to ramp up over next 2 to 3 years?
Let's say overall Unit 1 and Unit 1 at Goa and I think Ghaziabad, both these plants are having good capacity utilizations, maybe around 70-80% kind of utilizations are there. Unit 2 Goa, which is a bigger unit and larger capacity, that's I think hardly around 20% kind of utilizations are there. So as the US business and other businesses are extending the market of Unichem's product in various market and filings and all that. With that, the capacities of Goa plant will be utilized. As far as the Ghaziabad plant is concerned, as far as the Baddi plant is concerned, that utilization is almost around 30-35%. So those capacities, and that plant is having all other approvals of all the ROW market, European approvals, and Australia, New Zealand. So there are so many markets they have approvals and all.
Understood. And are there, what is the trend in terms of product approvals in Unichem? Are there any pipeline of products to be launched in next 1 or 2 years? And
I think they will continue to launch around 4 to 5 products every year.
Okay, and this would be entirely formulation products, right?
Yeah, formulations, yeah.
Okay, and what would be your revenue guidance for FY26 and 27 for Unichem?
So far we have not worked it out, so we will let you know in the last quarter of the current financial year.
Okay. Thank you so much, and best of luck.
Thank you very much. The next question is from the line of Surya Narayan Patra from Phillip Capital India Private Limited. Please go ahead.
Yeah, thank you for this opportunity, sir. So my first question about the US business. First of all, can you give us some update about the PIPERIA unit USFDA compliance? That is one. And secondly, after the integration of the Bayshore Unichem with us, so and the way it is already been indicated that US business is going to happen through Unichem. So while we are seeing a kind of a strong export growth number for Unichem, but IPCA's export growth has been muted consistently. So how should one think about the US business going ahead for IPCA impacting the growth numbers? And that would be the question about the US business, compliance of PIPERIA and the growth in the US side.
All plants we already received the approvals, and also there is no pending issue as far as PIPERIA plant is concerned. So all IPCA plants are cleared already. which includes Piparia plant. So there is absolutely no outstanding issues anywhere.
Okay, all the 3 units are cleared now.
Yeah, all 3 units are cleared simultaneously. Yeah.
Okay. Regards the US business, since now everything is going to be routed through Unichem, and in terms of the performance so far, what we have seen in the recent quarters, Unichem is doing well, but our growth numbers are on the export side still remaining muted. On the formulation side, can you just clarify what is really impacting here for us?
As far as the branded formulation business is concerned, we have muted growth. In fact, in the first half of the current year, we have -2% growth on branded formulation. So that is largely because of all these currency fluctuations, and I think ruble from 80 level has gone to almost around more than 95. So
okay.
That has reflected on, and good amount of business comes from that market. So Russia and all. So that has a little impacted. I think from third quarter, I think in ROW market, we expect around 12 to 13% kind of growth. So whole of the year, the business growth in ROW will revive, and it's likely to be around 7 to 8% kind of growth for the whole of the year. So as far as your this ROW market branded formulation.
Okay.
As far as your generic businesses are concerned, by and large, let's say in first, as far as the European businesses is concerned, except UK, that business is good, and we have reasonably good growth. Around, we should have almost for the whole of the year around 10% kind of growth. UK, there are certain concerns are coming on pricings and all, and overstocking in that market. So probably this year, UK business growth will remain muted only, or there may not be any growth in that market. So that's the feature. As far as Canada business is concerned, that business will have around 10% kind of growth. Australia, New Zealand in the first half was because of some supply kind of constraint on APIs or certain APIs, and that has impacted the business. So that we expect the recovery because those shipments have started coming from outsourced API. So there will be recovery in those markets. As far as overall South Africa is concerned, we will see some kind of decline there because some tenders are lost there, and that business will have some kind of decline. So overall, we see a generic business, your branded business to grow by around 8 to 9%. Generic business will also have a similar kind of growth. Institutional business will have a better growth this year because last year the availability of your injectables because of plant upgradations and installations of some additional machines and renovation part. So that for half of the year that plant was not operating. So this year there will be better growth in those businesses. So overall generics we will see around 12% kind of growth for the whole of the financial year.
So this institutional business this quarter bump up what we are witnessing, it is not a one-off thing. It is a sustainable.
No. So last year in this period, injectables were not available.
Okay. So now this is a kind of sustainable business and can see ramp up.
Yeah.
Okay. Sir, regarding R&D, so now after the integration of the US business with Unichem, so how do you think about your IPCA's R&D versus Unichem R&D?
Unichem R&D, let's say they were doing some work on biotech, that's a completely stopped. They will continue to do work on formulation development for US market, and IPCA will also do. So the list will be some product they will keep on developing, some Unichem will keep on developing, some products where synergies are better in terms of our API basket, we will continue to develop. So both the teams will work on process development.
In fact, in the current quarter, we are seeing a significant lower number for Unichem in the other expenses which generally captures the R&D. So hence that is why I wanted to have some clarity. What is the kind of a saving in that we are seeing, whether it is from the reduced R&D spend on the Unichem side or it is something else?
No, R&D spend of theirs is almost around 3% overall. The 3.5% is continue to be there, and overall R&D spend is also around 3% of the turnover for the company, IPCA and Unichem put together, consolidated numbers. And more or less it will remain once our biotech plant get commissioned, which may happen during I think in the end of the current financial year. Thereafter, once we start producing the batches and then clinical work, and then in next financial year, overall R&D cost may go up to around 4 to 4.25%. Yeah.
Okay. Just last question, sir, from my side. If
Mr. Surya, may we request that you return to the question queue for follow-up questions, as there are several other participants waiting for that turn?
Yes, sure. Thank you.
Thank you very much. The next question is from the line of Arun from FPPL. Please go ahead.
Yeah, thank you for this opportunity. I hope you are hearing me well.
Yes, Mr. Arun.
Hello.
Please proceed with your question.
Fine. See, I just wanted just a few short questions and probably some short answers as well. See, the PAT comparison, can you give sort of a ballpark figure as to how do we compare with domestic versus international? Because the revenues is split as almost 50-50. Regarding the PAT, what is the percentage of domestic PAT and what is the percentage of international PAT, profit after tax?
Normally, if you look at, we don't divide that way, but we monitor the overall gross margin levels. And if you look at gross margins we have better gross margins in ROW market compared to India market. We have next business line is from gross margin wise is India business, India formulation business. Then comes the business which we do in Europe, Australia, New Zealand and Canada. Gross margin thereafter, I think South Africa are lower and UK also gross margins are lower. And last comes is the API. So overall we have highest gross margin ROW branded. Next is your domestic formulation. And we have good overall margins in generics also.
Thank you, sir. Sir, regarding the domestic formulations, in fact, I was referring to only the last quarter's performance, where your 52% comes from anti-inflammatories or NSAIDs, which is presumably Zerodol. Don't you think that there is an over-dependence on on one product, or is it is the company planning to also develop some products which could probably give a balance?
Let's say pain management constitutes of, it's not NSAID only, it's completely pain management. So pain management has two segments. One is rheumatoid arthritis and osteoarthritis. And rheumatoid arthritis consists of large number of products, and where we have disease modifying agents that are marketed. They are more chronic than even cardiovasculars, but they are classified as acute. And rheumatoid arthritis, we have very strong leadership. We have more than 60% market share. And every product we market, we have market leadership. So that is also clubbed with the pain management group. So it's not over dependence. Every product has leadership in your segment where we have good number of products marketing for rheumatoid arthritis. As far as your osteoarthritis and those segments are concerned, yes, Zerodol is the flagship brand is there, and but apart from that also we have a good number of other brands are there, which is like a brand which is for Itodolake as another drug, and Paracetamol is marketed in the brand name of Pacimol, and there are the other brands are there. So and they also have significant market share. So it's not the only one product which is concentrated. Zerodol is not the only product in pain management. So it's a completely risk is divided. Yes.
Thank you, sir. Just one more question, if you can allow me. Have the revenues of the 180-day exclusivity started churning? Does it come into the IPCA, or does it go to the Unichem? Because we have approvals of lamotrigine, etodolac, alendronate, risperidone, and levocetirizine and all. Have these molecules started, generic started yielding revenue, or will it reflect maybe in the near future?
Some of those molecules, Unichem is already marketing in US.
Oh, okay.
Yeah.
Etodolac is IPCA products, and that will be launched, I think, maybe end of the year. So it may be, I think we have already shipped 3 products and another 3 are in pipeline. So last will be etodolac.
Okay, sir. Thank you very much, sir. Thank you. We can move on to the next, sir.
Thank you very much. The next question is from the line of Nirali Shah from Ashika Stock Broking. Please go ahead.
Hi, thank you for the opportunity. I just have 2 quick questions. So first one is that on the launches. So we have been planning to launch almost around 5 to 6 products in FY25. So if any color on these products, what therapies are we trying to target? What geographies are we trying to target? If you could give some flavor on how it will contribute to our top line, any numbers, any ballpark number, and if not that, then the market size of these products. So anything meaningful, any meaningful opportunity, any data on this would be helpful.
Yeah, as Mr. Jain has already explained, 3 products we have already shipped to Unichem and it has landed in US. So whatever primary sales we have done, it got knocked off in consolidation because that product is not moved to the market. So there will be always a gestation period between the time we ship to US and those products started getting marketed. So by the end of the current financial year, we should be launching about 6 products in the US market. That is what is our target. And whenever we were there in these products in the earlier time, we used to have a very good market share. But gaining market share will take some time, but we are very confident these products will do well as it was earlier doing.
So what kind of market share are we targeting?
For example, when I was in US maybe 10 years back, in most of these products, my market shares were anywhere between, say, 20%, and in one product is about 80%.
Okay, that is helpful. And say, for example, from a 2 years perspective, we plan to launch around 13 to 15 products. So how are we planning out on that?
We will be ship 6 products to Unichem US, maybe identical number in the next financial year.
Okay. And my next...
Unichem itself also will be launching 5 to 6 of their new molecules in the US market in the current financial year.
Understood.
Yeah.
And my next question is, what could be a possible growth drivers from a 2 years perspective? Which geography do we see to be contributing the highest and followed by... so basically my question is, what could be our possible growth drivers in terms of geography?
Practically IPCA sales in US today is currently 0. So you will see a very good growth in IPCA products being sold in the US market going forward in the next 3 to 5 years. Similarly, one more opportunity will come. We will be taking Unichem products in all other markets where earlier they were not marketing, like ROW market, whole of Europe, Australia, New Zealand, Canada. So Unichem will also benefit out of that. So as a entity, IPCA group will see a very good growth going forward in the generic formulation business.
Understood. Just a last one if I can squeeze in. On the supply chain issues, so are we still facing any disruptions that persisted in Australia and New Zealand?
Not, madam, nothing as such. No issues.
Okay,
So
great.
the problem was there in the second half of the last financial year, non-availability of one material, which we already got in the current financial year, and the business has already started. So as we speak, there is no problem as far as material-related issues. There is no issue.
Okay, that's it. Thanks.
Thank you very much. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, sir. Thank you for the opportunity again. On this U.S. business arrangement that the U.S. business or IPCA's U.S. product will be sold by Unichem, will there be any transfer pricing be there wherein IPCA will account for some profitability given our stake in Unichem is around 70%? So how the economics basically work out for us when we sell our product through Unichem?
Kunal, if you recollect, whenever we were earlier there in the US market, it was on a similar line, correct? Our products were marketed by other marketing partners on a profit sharing arrangement. So similar way, Unichem operation will be done. So we will sell our product to Unichem US. There will be a margin in our sales. And US level, there will be profit sharing arrangement also, both. And most of these products are also backed by my own API, so there will be some benefit out of API manufacturing also.
Sure, sir. Sure. Understood. And on the generic business revenue, Jain sir told that the growth guidance of around 12%, is that for the remaining part of the year? How should we think about it?
Yeah, for the second half of the current financial year. But overall, including first half and second half, the generic business should grow anywhere between 10 to 12%.
But sir, first half, generic business first half is only 2% growth, right? So then
I understand because the shipment what IPCA did to Unichem US. So because it was still remaining as a stock in Unichem hand, it has got knocked off in the consolidated business. I am talking here consolidated business, not standalone.
Correct. So probably 30 or 60 crore additional, and then there is a base business growth. Is that the way to understand? You would have sent maybe 1 quarter inventory?
Yeah, that is right. Yes.
Okay. And sir, just one on the India business. What's the current sales force in the India business? And after addition, how is the productivity coming along for the India business? In terms of sales force.
We currently have about 7,000 medical reps in the field. And whatever guidance we had given earlier, all the additional people are contributing in the same way what we initially thought. There is no issue absolutely. So they will become productive division-wise between 2 to 3 years.
2 to 3 years?
Some division productivity will be faster than the other divisions like cardiac and all. So as per our plan, everything is moving. There is no issue.
Okay.
And if you look at it's around 4.62 lakhs for the first half of the current compared to 4.36 lakhs in the last financial year frame. So overall, there is a good improvement in overall productivity in spite of addition of the people.
Sure. Thank you and all the best, sir.
Thank you very much. The next question is from the line of Zain from Dolat Capital. Please go ahead.
Hello, am I audible?
Yes.
Thank you for the opportunity, sir. Just want to ask the question against institutional business. Can you please repeat the guidance for the business for FY25?
Which one? I think your voice is breaking.
Just a minute.
Hello?
Yeah, am I audible now?
Yeah, you are audible now. Yes.
Yeah. So I want to know, sir, about institutional business guidance for FY25.
See, we have earlier also explained this institutional business consists only of anti-malarial formulations. So this business will fluctuate anywhere between 300 to 400 crore going forward.
Okay, sir.
I am talking annual business.
Okay. And it's about India business guidance for 25?
So whatever guidance we gave in the beginning of the year, anywhere between 11 to 12%, we stand by that. There is no problem.
Okay, sir. Thank you.
Yeah.
Thank you very much. The next question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead.
Sir, thanks for the opportunity. Sir, just with the earlier comment of the pecking order of the gross margin, so just a clarification. So even at the EBITDA margin level, would the ROW branded generics would be higher than domestic formulation?
Yes, yes. Even at EBITDA level.
Okay. So secondly, with respect to relaunches of the products from IPCA's plant, excluding Unichem products basically, so since it's almost 8-9 years, so the price erosion in the products which we are supposed to launch, like compared to what we were there in 2013-14, what kind of price decline would have happened in those products, specifically the ones which we are going to relaunch?
We don't see any price decline in them. So prices
last 8-9 years, there is no price decline?
Better than what it was when we were there in the market 10 years back.
Oh, interesting. I mean, was it because the companies have exited, sort of reduced the competition, or if you could throw some light?
In these products, we were having a very big market share. The moment we went out, the prices increased. They have moderated, of course, subsequently, but still it is now better than what it was 10 years back.
Okay. So, considering these launches and subsequently in FY26, so specifically Unichem, specifically IPCA X Unichem, what kind of US sales one can expect in FY26, if you can share?
It is too early to give the combined sales of IPCA plus Unichem as a group in the next financial year. As we progress, maybe in the subsequent phone call, we will give the guidance. But whatever we said in the beginning of the year, our plan of launching 6 to 7 molecules in the US in the current financial year, that is progressing as we anticipated.
Okay. And then lastly on generics exports business again, like the first half numbers look lower, but then the base of second half FY24 is also low. So that way then will 12% will be still a good enough number, because even if I go by the run rate of what we have done in 2Q, the growth would be really strong in second half FY25.
And I agree, but everything ultimately depends on what kind of market. See, the US business, what we speak, the market share improvement will be gradual. So it is very difficult to comment how much market share we will get in the immediate, in the second half of the current financial year for the products which are already launched. So all that permutation, combination and question marks are already there. That is why we said we will give fair guidance in the later half of the current financial year, maybe in the fourth quarter phone call, what we are expecting in the next financial year as far as the US business is concerned. Current year, our generic business should be anywhere between 12 to 15%. That is what is the guidance.
Even if you go by the...
Yeah?
Even if you go by the generics exports for the current quarter run rate, when your US product launches will be additional over and above this, still the numbers look quite strong for second half of FY25.
And there are challenges, as Mr. Jain has already said, in the South Africa, where we lost certain tender products, and in the UK market. Considering all that, we are giving a muted guidance. If the situation improves, we may do better than what we are committing.
All right, sir. Thanks. That's it from me.
Because in the last year, second half, there was very good business from South Africa market, which looks today difficult.
Got you, sir. Okay. Thank you.
Thank you very much. The next question is from the line of Arun from FBPL. Please go ahead.
So just trying to understand the protocol. See, if a product which is approved by the US FDA in the Orange Book or IPCA, and still it can be taken for marketing and distribution by Unichem. Is it possible, or is it being done? How is it?
It is possible. Earlier also, whatever products which were approved in our name, they were getting marketed by other marketing partners. Every company does that, and it is the practice in the US market.
Oh, thank you very much, sir. In fact, I was thinking that products, so that means only the manufacturing is the one which is the key, correct?
Yeah. Manufacturing has to be from the site from where the product has got approval in the by US FDA. That is the only requirement. Marketing can be done by any other company.
As far as IPCA is concerned, we have only Silvassa and Indore which have the US approvals, correct? The other 6 don't have.
Formulation facility, Silvassa and Indore, and API facility, Ratlam.
Ratlam, okay. Is there any moves to make Ratlam, Kandla, Dehradun, Sikkim and all? US
purely for domestic market. From Kandla, we also cater to all other markets other than US. Europe, Australia and all, we are catering from Kandla. It is a beta-lactam facility.
And we are satisfying all the observations of US FDA, correct?
Yeah. We have nothing outstanding as far as US FDA matter is concerned.
Okay, sir. Thank you. Thank you very much, sir.
Thank you very much. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Thank you for the opportunity again. Sir, just one clarification. You said that the next business guidance would include our US revenue which we have supplied. But then doesn't that US revenue would flow through subsidiary which is Unichem?
Boss, but ultimately it will get consolidated in my accounts because Unichem also is my subsidiary.
No, that is fine, sir. But then like to like there is a confusion, right? The generic business has grown at 2%. We are guiding for 12, and then we might end up doing double counting.
That 2% growth was standalone IPCA, and guidance is for consolidated business. Ultimately, everybody will see consolidated business. Now, for example, standalone business. I have done some sales from IPCA to Unichem, which is booked in my books, but that material just reached US and it has not gone to customer. In the consolidated, it gets knocked off. So consolidated is more important than standalone. So as far as generic business is concerned, better let us go by consolidated guidelines.
Okay. So sir, would you at some point would you change our segment reporting so that it helps us understand the businesses better? Because I think Europe is also now sizable business for us. Right?
Correct. See, Kunal, what has happened actually? The issue is confusion. We took over Unichem in the last financial year in the month of August. So anything we talk today is not comparable apple to apple because last year consolidation of Unichem started in our books only from the month, say, from September. So last year consolidation of Unichem was there only for 1 month and few days, whereas current year it is there for all 6 months.
Correct.
So in the next financial year, the apple to apple comparison will become clear, and we will be giving guidance market-wise consolidated guidelines.
Okay.
As far as the generic business is concerned.
Okay. And our consolidated top line growth guidance for this year is around 9%. Is that correct?
Yes. Yeah.
All the business included.
Correct. Right.
Okay. Thank you for the clarification, sir.
Thank you very much. The next question is from the line of Harshit Dhoot from Diamond Asia. Please go ahead.
Hi. Am I audible, ma'am?
Yes.
Yes, Mr. Harshit. Please.
Thanks for the opportunity, sir. My main question was on the other expenses. We have the tender business in which gross margin is directly flowing to EBITDA. Our domestic productivity has increased a lot. Then still the delta is a bit high if you see the way the business is getting ramped up. So is it fair to assume that this 27%, I'm talking about on console level, this 27% other expenses will continue going forward?
See, again I said, consolidated numbers are not strictly comparable because last year consolidation, Unichem numbers were there only for 1 month and few days. This year it is for all 6 months. So that confusion will be there in the current financial year. From the next financial year, everything will be comparable apple to apple. For example, in the current financial year 6 months, my other expenses also include entire 6 month expenses of Unichem. Whereas in the last financial year 6 months, it was only for 1 month and few days. So you can't compare that.
No, even let's say sequential basis also, right? 574 crore to 637 crore. 637 crore adjusted with the forex losses. So I just want to understand the run rate for the SG&A for these other expenses going forward. So I just want to understand how this operating leverage benefit will play out as we are focusing a lot on this.
You can take whatever run rate of other expenses in the consolidated first quarter and second quarter figures are there. More or less, it will continue. Don't see anything about last financial year. Current financial year, first quarter, second quarter, other expenses are all, there is no exceptional expenses in that. That will continue.
Okay. Thanks, sir. Thanks a lot.
Thank you very much. The next question is from the line of Kunal Randeria from Axis Capital. Please go ahead.
Hi, good evening, sir. Sir, the October IQVIA data for India shows that the growth has slowed down to around 6%. So do your internal numbers also show a slowdown?
No, we are growing as whatever we have projected, and whole of the year our growth will be anywhere between 11 to 12%.
All right, sir. And just to kind of reconfirm, it's a broad-based growth, right? And not driven just by the pain franchise?
No, nothing. When they were showing 15, 16%, 20% growth also, we are growing around 11 and 12%.
Okay, sir. Got it. Thank you.
Thank you very much. The next question is from the line of Shiva from Purnartha Investment Advisors. Please go ahead.
Hello. Am I audible?
Yes.
Mr. Shiva.
Yeah. Thank you for the opportunity. My first question is with respect to the US thing. Earlier, when we were in 2013 to 2015, what was our total revenue in US at the time? And if you could split between what was for formulations and API, and what was the profitability at that time?
Our total US business that time was around 400 crore, including about 150, 160 crore API business. And in both formulation and API business, including share of profit, we had a very good EBITDA margin.
Okay, so it was comparable to the ROE as well, the rest of the market. It was in the top.
Yes.
Okay, great, thanks. And the second is with respect to your other businesses. Obviously, it's like if I just calculate, it was somewhere around 80 crores. Obviously, you said last time that you were working on that and you are seeing some progress. Over the last few quarters, it's been at 90 and 80 crores subsidiaries revenue, and earlier it was slightly higher. If you could just throw some light, how is the progress over there, and going ahead, how do you look at your subsidiaries revenue? This is excluding Unichem.
Subsidiaries, one is Tropic Wellness, which is doing reasonably well, around 10-12% top line growth and maybe 15-20% bottom line growth. Tropic Wellness, which is into nutraceutical business. Then other subsidiary is Onyx Scientific, which is into CRAMS business, and it is based out of UK. There also the business is steady. This year they have a certain issue about discretionary spending coming down in the market, but still they will sustain their operation. Only subsidiary which is now not delivering, which going forward should do better, is IPCA, which is out of US. They are also partly into CRAMS and partly into small scale API manufacturing for the US and other market where certain projects are going on. So these are our operating subsidiaries. Apart from that, we recently started marketing our own products in the UK market through our own subsidiary, IPCA UK. So these are major subsidiaries which are into business.
Okay,